Hi everyone. Hi to all people that is watching this new webinar for HEC Latin Finance Community and for also the HEC Finance Global Community. For all the programs on HEC Paris and the executive HEC programs, we are glad within the HEC Finance Community to welcome Pedro Paganella, whom is partner of McKinsey, um, whom I met actually in my actual job, and I believe that he's a very clever and a smart guy, and I believe that he will bring up us for us a lot of information and good information of the trends of the banking in Latin America 2026. So Pedro, welcome to this webinar and thank you for accepting the opportunity to present this topic.
Thank you very much. Hello, everyone. My name is Pedro Paganella, and it's a pleasure to be part of this community at HEC, and more than happy to share a little bit of insights that we have seen in Latin America. Just a quick presentation about myself. I am a partner from São Paulo office. I lead engagements around Latin America, serving banks into developing strategies, implementing transformations, and I also lead the risk practice in Brazil. So thanks again for the invitation.
Oh, thanks to you, Pedro. Actually, it's a very good opportunity having you here. So let's start with this. I know that you are a huge, a lot of working with a lot of banks in Latin America, around Latin America. So to start with this type of information, this conversation, first of all, I want to ask you, how can the financial system in Latin America leverage digitalization? You know, this is like the new trend over there. All bankings are looking to go break through digitalization. We're having now fintechs and all that kind of stuff. How do you feel that this can be a good leverage for this financial system here?
Oh, perfect. So this is not a new thing, right? So we have seen the last 10 years a huge increase on digital players and the use of digital as a preference by clients. So in Latin America, if I'm not wrong, it's around 70% of people have bank accounts on digital banks and incumbents. So it's not a new thing, but it has shaped the local competition landscape massively, and it will continue shaping the landscape. One of the things that we saw with the evolution of digital and digital attackers is the impact that they had into incumbents in the region. I will use one graphic here that I would like to share just to show you what has happened in the region, and when we compare, including with other places on the planet, with the competition landscape. Let me share my screen here. Give me 1 second. So this is, by the way, this is an article that I recommend everyone to read. This is a very recent article that we published about how the retail banks are moving in Latin America specifically. So I highly recommend in the end if you can share also with everyone this article. But the graphic that I would like to mention is this one, right? So what is happening is the following. You have 2-3 years ago, you had most countries with what we call a high principality into incumbents, right? And this is still seen in Europe, for instance. So we see until today that's not as disrupted as some other parts on the planet, but it has escalated a lot in Latin America. So what I'm showing here is on the x-axis, you have the primacy of digital banks. So what it means is the principality. We do surveys each year in Latin America to asking clients, asking bank clients, which bank is its main bank, right? So who owns the principality of that client? And year after year, we see an increase on principality of digital banks. So you have countries which nowadays you have 25% of the principality claims going to digital banks. That's the case of Brazil, one of that has been among the countries the most disrupted one, which basically Nubank has played a major role there. But we are also seeing other places. And the y-axis is the number of institutions which the client claims to have relationship. So what we basically see is the following. With the increase of digital, the shift on channels, which the clients are preferring more and more digital channels rather than the classic brick and mortar. Two things happen. The first one is the increase of the number of institutions each customer use. So it has been a global trend. With countries like Mexico now with on average 4 institutions per client. So they have four banks that they have or fintechs that they have relationship. Brazil with almost 5 now. And the second one is the loss of a principality, right? So you have basically year after year incumbents suffering with the loss of principality to digital attackers. And even though we see in Brazil is this shift stronger than the other countries, we expect that this shift will happen as well in other countries in the region, right? So that's basically what I have seen, and including talking with many universal banks. This has been one of the key strategic factors in retail banking that they have been discussing recently, how to tackle that. And we don't only expect it for non-Latin American audience, we also expect that to happen in other regions as well. There are multiple factors that made Latin America one of the key landscapes for this kind of development, but it will happen as well in other regions.
Okay, that's a very good point. That's pretty much interesting, and the fact that you are looking this trend that now the principal bank is gonna becoming a digital predominance, or the bank is becoming a digital bank is very interesting. I've seen some news that this fintech called Revolut, super famous in Europe, now is getting into Latin American market.
Yep.
And that's pretty interesting because at the end of the day, you are looking at fintechs, and these fintechs that born as a payment method are coming to buying banks, traditional banks, and taking all the banks and the know-how and becoming now neobanks. And that's why I have this second question. What opportunities are emerging for the traditional banks, aiming that now we are having this fintech as companies that is now our new rival in the battle game, if you want to see like that. We have neobanks and embedded finance in the region. What do you see about it?
Yeah, I would like to divide into 2 blocks, right? So the fintechs today on the wholesale area are not still a major threat. You have some efforts on that segment, but it's not the key target. But when we look at the retail banking, it brings a lot of threats, but also a lot of opportunities, right? So what incumbents are good? Incumbents are good in many things, but what are the current advantage that they have is, first, they have a full portfolio, so they have more value, a better value proposition to maintain principality. So if you want a mortgage and a credit card and And other products, typically they have the full portfolio, right? The second thing, they have a very good funding. So it's not as easy for fintechs getting to the same funding costs that large banks are able to get, right? And of course, they have still a massive footprint. So they have strong brands, etc. What is the threat which will translate into a major opportunity, which is one of the things that we are discussing a lot with banks recently? And I would like to use one graphic here to highlight that. This one. So what happens is the following. How fintechs are penetrating in the region. Basically, they have a couple things, but two main things that they have. One main thing that they have that incumbents don't have is a very low cost to serve. So you take, for instance, the leading digital bank. Couple years ago, they had a cost to income ratio of 80% plus. So it was almost, it was not functional. I mean, they were growing. It's part of their strategy. But now they have a cost to income ratio below 20, actually. The last new bank, I believe, the last quarter published that they reached around 19 cost to income, which is incredible, and it gives you a lot of scalability to serve clients in retail, which in the past was not possible to serve. So mass market in Latin America, which is a market with high probability of default, which is very volatile. So you must be really cost cautious to serve them. This is a niche that these banks are evolving. And what is the consequence for incumbents? It creates a huge opportunity to reduce cost to income with new technologies. So one of the key things that we have seen into discussions with major banks and clients is the use of agentic AI to streamline, to make the banks more efficient, to be able to compete with those fintechs, right? So here you have, for instance, they are advancing on that. So when you see in this graphic, all the incumbents are trying to reduce cost to income, right? So this is not something that they don't know. The challenge is how to achieve that, because you have massive structures, a lot of legacy systems. So it's probably the main challenge, but also the main opportunity, because from one side, fintechs must, it's a very simple equation problem. Fintechs have a revenue issue. So they don't bring as much revenue per client as incumbents do, because they don't have full portfolios. And incumbents have a cost issue. So how they maintain this full portfolio at the same time that they continue with a cost to income below 30, below 20, even some specific case like Nubank. And that's basically the key opportunity I see today, is to keep the strongholds and how to evolve with AI, agentic AI, to reduce costs. And we have seen banks advancing on that. We have supporting banks advancing on that. So choosing domains which they want to revamp how they work, and domain by domain doing this kind of efficiency through AI.
Oh, that's very interesting, and it got my attention about the agentic AI. You know, actually yesterday I was just watching a conversation that the CEO of NVIDIA had with Morgan Stanley, and he was talking with them, saying that agentic AI is here to stay. It's not just part of the a famous thing that we are seeing in 2026 is something that is gonna to stay, and we need to start living with it, you know, and being part of this revolution. So it's pretty much interesting, and you got my attention with this, and I wanna deep dive a little bit more in the article that you are showing us, and it got my attention this the four core banking archetypes. Could you explain me how does it works? Why you define these four archetypes, and how this can define the strategy for the banks right now?
No, perfect. We have one approach which we use to. So before talking approach, so when we look into the Latin American landscape on banks, you can classify them very specifically through four archetypes. So you have what we call the sleeping giants, typically incumbent banks, which 20, 30 years ago had a very prominent position in the country that they are. But through time, they lost a distinctive value proposition. They don't have a very strong mobile orchestrated distribution. They may have some operational scalability given the size, given the legacy, and they don't have a tech first, say like that, DNA. And we see that with not with only qualitative points, but also quantitative. Like for instance, we can see the number of tech people or AI data modeling people over the total of FTEs of a certain company, and you see that they have typically 2-3 times less tech profiles when compared to other institutions that are more developed. So this is one that we have seen. Most countries have one or two of those banks which were very successful in the past, and now they failed to catch up with this evolution in the market. The second one is the leaders, which were in the past leaders, but they did react on time. So they managed to adapt their value proposition. Maybe they don't have the most fantastic value proposition, but they managed to adapt it, maybe focusing more on affluent segment, maybe focusing less on, I don't know, in a region. So they reshaped that. At the same time that they evolved a lot their mobile capabilities, orchestrated distribution, so a lot of focus on that, and also more investments on tech DNA. So they were able to move. You have strong banks with 20 plus ROEs doing that. You have the third group, which we call the digital superstars, that they're the ones that are actually transforming through a very distinctive value proposition. I can tell names, right? So Nubank, it's the clear example. Revolut now entering Latin America, as you mentioned, also it's a clear example of that. They have a very strong mobile orchestrated distribution. They are tech first, so they are born tech, right? And you have the fourth one, which we have seen, and those are maybe the most interesting ones because they are in the middle. So they know they need to evolve. They didn't manage to create a distinctive value proposition. They evolved a little bit the mobile. They invested a lot on tech. So not that they don't know, but they didn't still catch that. And basically, and those can be translated in real numbers. These are pools of multiple players in the region, which those players with those markers typically have very concrete numbers. So, for instance, the sleeping giants, you will see them around both the sleeping giants and the question marks. We will saw a cost to income ratio around 50%. So it's high. When we take rewired leaders, you can take Itaú, for instance. I think it's a good example. They are below 40 already with the cost to income. They have ROE below 20, so they are very strong. Digital superstars, again, those are the the players that are disrupting the retail banking, right? And the question marks are the guys that are trying to move, but they are not getting there yet. So that's typically the landscape we see in Latin America. We see more strongly in Brazil, given it was one of the front runners in this disruption with Nubank and other fintechs. We have hundreds and hundreds of fintechs, but of course you have the largest ones, such as Nubank. And the question mark here, I think I would like to put is how those the royal leaders managed to get there. The sleeping giants will be very complex to them to advance, but the question is how the question marks, or the ones that actually invested a lot on tech, evolved their mobile, it still didn't manage to get this distinct value proposition actually to battle both the rewire leaders and the digital superstars. So that's the landscape. You change the country, you go to Argentina, Brazil, Guatemala, Mexico, and typically those are the four groups that we see, right?
Okay, that's pretty much interesting. And I'm seeing that actually, like the sleeping giants, they have the predominance in both 2 and A, like in distinctive value proposition, mobile orchestrated distribution, and is totally opposite in the digital superstars. You see, they have a spike in distinctive value proposition, mobile orchestrated, and then the operational scalability also is the opposite. So you can see these two breakdowns that are the main differentiated steps that a bank need to do a little bit in order to increase also profitability, decrease all the costs and operational costs that to make it more sustainable in the long term, I believe. So that's why my second question comes, and knowing all this information that you are giving us right now, how can financial institutions in Latin America turn this data into sustainability processes, and also how they can use these artificial intelligence to get real competitive advantages?
Mm-hmm. That's a very good question, and I come back mainly on AI, right? On AI, sorry. Let me use as example the digital superstars. And if not wrong, it's one. I don't remember if it was the last one that I read from Nubank, but it's normal for all the fintechs. One of the things that fintechs are proud of are scalability, right? So they want to do, if they serve 100 million clients and 200 million clients, the marginal cost should be close to zero. So the extra cost for each client that you increase in the database. That's part of the operating model, right? And when 10 years ago, fintechs were about let's reduce brick and mortar, so to make more efficient. The next 10 years for major fintechs is how to be AI first. What I mean by that, if you take a domain, for instance, let's take the credit domain or let's use the credit domain, the end-to-end credit domain. You have a lot of steps of unstructured data, which you need analysts, you need people for underwriting, you need people for creating presentations if we're talking about wholesale. So you have a lot of activities which could be more efficient if you have the use of agentics, right? So what we have seen and talked with fintechs is 10 years ago, it was about brick and mortar to make us more efficient, more marginal cost zero. The next 10 years is AI. So the decisions enabled by AI. Unstructured data is organized by generative AI. And operation, streamlining, and execution made by agentic AI. So that's basically the main thing that incumbents, and most of them are already doing that. They're already starting, but in an embryonic way. So they do a POC in one place. They do an MVP in another area, mostly on tech, including with those new solutions you have with Anthropic and so on. But the thing that incumbents need to understand, and need to organize, and need to focus and guarantee that's in the C-level agenda is how you make this at scale. The main problem I've ever seen, I have seen when serving clients that they know that this is the path to go to become more efficient, is how I do this at scale, given the legacy systems that I have, given the huge organization, bureaucracy, governance that you have. This is the thing. And of course, AI by AI, it doesn't work. You need, as you mentioned, you need data, a lot of data. You need revamp the architectures that allow to develop that. But that will be the direction that the next 5 to 10 years will go. Fintechs are on the forefront on that. But incumbents, if they want to keep a competitive advantage, given the pressure on margins, the pressure on competition, they need to be more keen to explore those AI solutions enabled again by data. We have an exponential amount of data. And that's it. That's basically, I believe, again, it's me, it's not the firm. I believe is the path to go. And I truly believe that. And that's what I try to help the clients move towards.
Perfect. That's pretty much interesting. And thank you, Pedro. Also, talking about this, I believe that there is something that got my attention on the article that you were talking about it. So maybe this will be like my last question, because I know that you are a very busy man, so you need to move forward to another meeting. And so to finalize bank transformation in your own words, which will be like the 3 or 2 biggest steps to drive this banking transformation into digital era, and also to maximize profitability, minimize costs, and also having good asset quality, because at the end of the day, you're a bank, you want to have good assets in your portfolio, not bad quality, but it all will depend on your risk appetite. But you also need to do this in a very moving forward or step forward, looking to a very good transition.
Oh, perfect. I will talk the good part of having the opportunity to work with the main financial institutions in Latin America, because I have seen that. I cannot give names, but I have seen this kind of embark in a journey and create something very successful, given the attacks of the competition, right, of new entrants. And I think the first thing it's a lot of those discussions of fintech disruptions are seen as one, for retail bank mostly, are seen as one of the things that they should care. But I think again, me, not the firm necessarily. They need to see as if they want to keep operating profitably in the mass market, it should be the key North Star to them to create this plan, or this strategic plan on the C-level, on the board level, on how, if we want to be competitive in the mass market in the next 10 years, how we are going to achieve that, what is the North Star, what is the pillar. So that's the first thing. If you don't do that, maybe you should and maybe the decision for the bank is, look, I will go more to an affluent segment, which is a very profitable in the region, or I will be more wholesale. But if you want to go to the mass market, this will be the key question first in the C-level. So that's the first thing, is the C-level and the board have it clear that if they want to be highly profitable in the mass market, they need to move towards this direction. The second pillar on that is, okay, now that's pretty clear for my C-level, there is one major multi-year investment on changing the backbone of the technology and the use of AI for this thing to be enabled. So, and again, it's not easier said than done, but that's why you need to create a very strong transformation office with clear governance, with sponsorship from the C-level and from the board to make it happen. Because everyone will agree with the plan, but how you make this happen, right? And finally, the last one, and no less important, many times when we see banks around the region, they have difficulty into evaluating efficiency of their businesses on a client view. They typically see on a major segment or a product view. Why I'm telling that? Because when I'm talking about retail bank, it's not a monolith. You have from affluent segment, for middle class, and for mass market, and you need to be able to understand how much capital you're putting in each one of them, what are the real costs that you're putting in each one of them, and you don't need to have 10 segments, but you should have at least 3 or 4 or 5. And why I say that? Because in the end of the day, it will show you if you actually is profitable or not profitable in the mass market, which is the one that is being disrupted right now in the region. So you can take the decisions properly. So just to summarize, first one, you need to have a C-level pretty clear that you want to operate in this transformative mass market that digital is going, is attacking. So it's the segment that the fintechs are operating. Second, you need to have a robust transformation backbone, a transformation office with a sponsorship to guarantee that this thing moves. And the third one, you need to have transparency on cost allocation, capital allocation, to see effectively if you're making the right decisions for each one of the segments. And again, it's not that easy to do this kind of separation. Even on a capital level, which should be simpler, sometimes we see it's quite challenging for the institutions to do that. And then if you manage to do those 3 right, you will achieve the what we call the rewired leaders, right? That will, in the next 10 years, keep maintaining their ROE of 20+%.
That's amazing, Pedro. Thank you for all the knowledge that you are bringing us to the table right now. I'm very glad for that comments that you are telling us right now, and I believe all people now is learning new stuff, and actually new stuff for Latin America. You know, our markets are quite far from Europe and advanced economies, but are very interesting, I believe. And just to summarize, like what you are saying, also the competitive advantage comes from a full value creation capture with all the processes that you are saying us, and take that value creation and capture it and scaling it up to maximize profitability in the long term, right? So thank you, Pedro, again for being with me today and being with the HEC Finance LATAM community and the HEC Finance community global. And for all the students and non-students and part of these communities, thank you for connect. And also, Pedro, I don't know if you want to share where they can contact you if they are interested also between these topics, talk with you, or also maybe people want to get in touch with you.
No, fantastic. So first, again, thank you very much. I recommend everyone to take a look on the article as well. I think it brings some insights from the region. If you can contact directly Gabriel here, he has my contact for any questions or topics that we'd like to deep dive. And again, very happy to participate here.
Oh, thank you, and merci, allez.
Bye.
Bye.